Hello, welcome to the weekly technical analysis review here at XM.com. It's Monday, April 24th. I'm Selena Nicholas, technical analyst, and we'll look at some major pairs here on the daily chart as well as gold. So we'll start with EURUSD on the daily chart, and we can see EURUSD gapped up more than 1.5%. Today it rose above its 200-day moving average. It's the second time this year, and it beat the previous 2017 high of 1.0905 today and reached 1.0919 early in the Asian session, but the pair is nudging lower right now, although it does remain above its 200-day moving average, so that's acting as immediate support for now. So prices came quite close to a key level at the 61.8 Fibonacci. That's located at 1.0930, and that's the 61.8 Fibonacci of the move from 1.13 down to 1.0339. We have immediate support also provided by the 50% Fibonacci at 1.0817. Now, as long as the market stays above its 200-day moving average and above this 50% Fibonacci, then there is scope to push higher, since RSI is above 50 in bullish territory and it's trending up. So if there isn't any sustained trading above its 200-day moving average, then the market could fall back towards the 1.07 area. That will be key support. Let's take a look at pound dollar. It's consolidating. It was consolidating after a sharp rally, the April 18th jump higher that took the pair to 1.29. So since then it's been pivoting the 1.28 level. The short-term structure still remains bullish, and unless there's a drop below 1.26 or where the 200-day is, then this bullish setup will remain. Let's take a look at EURGBP. Also gapped up. It was below 0.84 resistance before jumping up to the 0.85 level where it found resistance. The outlook overall remains neutral for the pair. It's in a broad range between 0.83 and 0.8855, and the moving averages are not really showing any clear direction, especially the 200-day. It's flattened out and it's resting on the 0.86 level. That would also act as a key barrier for any upside moves. Let's take a look at Euro Yen. It closed Friday below 117. It was actually in the 117. It closed below 117. Today the pair gapped higher into the 120 handle before falling back down, but looks like the pair is out of its recent bearish bias. It was in a falling channel and bounced out of it last week before obviously jumping higher today above its 50-day moving average, above the 50% Fibonacci of that recent drop. Now, unless prices fall back below 118 into the channel, it looks like the pair is gonna the outlook is gonna be neutral, and it's moving out of its bearish bias. Dollar yen, this pair was in a downward channel. It still is actually, and the outlook hasn't really changed much. This bearish market structure, and it's also below the Ichimoku cloud, even though there was a big gap higher into the 110 yen level today. The outlook hasn't changed much unless prices can move above 112, the 112 area. So it's a bit too early to say that the market has bottomed out at the 108.12. We need to see some sustained trading above 112. Let's take a look at Aussie dollar. It saw some choppy price action last week around its 200-day moving average, just above the 0.75 key level. This is a key level, as you can see. In the past, it's been tested a few times, so it was more or less keeping the market above this level, and it's been holding as an important support. But unless the market rises above the high of 0.7748, the outlook remains neutral. Now let's take a look at gold. Market structure hasn't changed much since rising from the December low of 1122.66. Market reached a 5.5-month high last week, just under the key 1300 level. That was making higher lows, higher highs, so it was quite a bullish market structure, especially after breaking above the 200-day moving average. But we saw some near-term consolidation since hitting that 5.5-month high, and then today we saw prices drop below 1280, which was acting as a support level. But this hasn't really changed the bullish market structure unless the market falls below the March 10 low of 1194. That would significantly change the outlook. And that's all for today. Thanks so much for watching. Have a great day.